Hi, thank you to everyone who has dialed in so far. Let's just wait for a couple of more minutes for rest to dial in. Thank you. A very good afternoon to everyone for dialing into this virtual event, which is about cryptocurrency in India, understanding the regulatory landscape. A quick look at the event logistics for today, which is in case you get disconnected, you can rejoin from the link given in the confirmation email. At the same time, you can submit questions via the Q&A feature of the Zoom. We will get back to it and we'll try to answer as much as possible given the time. This event will be recorded and the recording will be sent out to you via email within next 48 hours of the event. A quick introduction about Chainalysis to those who do not know us. We are a blockchain analysis company. We provide investigation and compliance tools to, and we are working closely with 330 over customers, which includes government as well as businesses across 50 countries. Let's introduce briefly about our today's panelists and speakers. So starting off with myself, Sagar, I look after the regulatory compliance and law enforcement at Chainalysis for the APAC region. We have Vikram, who's the Chief Marketing Officer at ZEPE. We have Rajashekhar, who's the Legal Counsel at ZEPE. We also have Rahul, who is the Chief Executive Officer at ZEPE. And we have Shivam, who's the Chief Executive Officer at BuyUcoin. Let's begin with the agenda of today's call. We'll be giving you a tour of the Indian market, especially covering on various aspects such as the cryptocurrency history as well as the journey in India, the changes in the regulations that has been taking place since last few years, as well as some of the challenges and misconceptions that are floating around. And towards the second half of the session, we will have panelist discussion where our esteemed panelists will be answering some of the exciting questions. With that, let me begin by introducing the cryptocurrency and typologies based on various risk levels. So there are almost 14 categories which are mainly used or being identified across various across the industry, which includes from the low risk categories until all the way to severe. The severe ones are important to take note, which comprises of terrorist financing, activities related to sanctions, as well as child abuse material. The other services are mainly residing between low to high risk categories. Let's deep dive into the usage of cryptocurrency, what it is mainly used for. So starting from mining, where any cryptocurrency, for example, Bitcoin, are mined and then circulated into the blockchain for further trading or buying or selling other activities or services. So for example, buying or selling legal goods and services or buying or selling illegal goods and services are both part of the cryptocurrency usage. For example, one of the services, which is Darknet Markets, where a lot of illegal activities that take place, and it is important to monitor those activities taking place on Darknet services. So let's take a look on what is Darknet Markets all about. It is basically a commercial website which serves as a black market for items such as drugs, stolen card data, weapons, child abuse material, and the identity of the users are usually hidden on these markets. As such, it is quite critical to monitor and to monitor these kind of services taking place on Darknet markets. The next important service is exchanges. which is the most common way of dealing with cryptocurrencies. It is an online service for buying, selling, or trading cryptocurrencies. There are different kind of exchanges, which we will go through in the subsequent slides. The key players or the prominent names that are familiar with most of the people, I believe, who has joined us today is ZEPE, for example, BuyUcoin are one of or are few of the prominent names in India, and also the exchanges such as Kraken, Huobi. These are some of the names which are also very familiar across the globe. In terms of types of exchanges, there are three broad categories ranging from retail, peer-to-peer, and decentralized exchanges. Retail ones are the most widely used type of exchange. Most of them allow crypto to fiat trading, but not all of them. Then the second type is peer-to-peer, which allows individual to trade cryptocurrencies and fiat directly with one another. And the third one is the decentralized one, which facilitate direct trades between wallets. Although this is one of the most difficult ones to use, but at the same time, they provide security and control to the users. Let's deep dive into the Indian market and take a look at the numbers and see where India stands in terms of cryptocurrency usage and other prospects. So looking at the global cryptocurrency adoption index, there are four key components to derive at this conclusion, which includes on-chain value received, on-chain number of deposits, on-chain retail value, and the fourth one is P2P trade volume. So if we comprise the data from these four components, we've identified that India ranks 11 out of a total of 154 countries. If we specifically look into an on-chain value received among 28 countries in the Central and Southern Asia and Ocean region, India ranks second in it, which means India took in more than $6.6 billion worth of value on-chain in the past year, which is just second to the Vietnam. This is the data from July 2019 to June 2020. And if we deep dive into the P2P trading volume for the same region among 28 countries, it is identified that India ranks first in P2P trading volume, which is really a positive news to it, that how frequently or how fast India is growing in this perspective, which means in terms of numbers, India drove more than $104 million of P2P volume in the past year. If we see and compare it to the rest of the countries, this is more than 2 times than the country which is ranked second in this list, which is none other than Australia. If we summarize the numbers of what we have seen in the past few slides, it is clearly seen that illicit share of value received, which is 1.7%, is more than double than that of value sent. The main reason remains that the illicit activities are mostly remain unspent. With that, let's take a look inside the regulatory developments that are taking place in India. Cryptocurrency is not something new in India. In fact, it was introduced much earlier than various other countries in the region. The first cryptocurrency exchange was established in 2013, and recently in 2020, we have seen more interest due to mainly because of the Bitcoin price, which has increased sharply. And as of this month, it stands at 13K USD. Also, there was a lifting of ban by the Supreme Court earlier this year, and major events also took place this year, which was Bitcoin halving. And if we see as of August 2020, there are more than 6 million cryptocurrency users in India. Various guidelines and advisories has been introduced since 2013 to prevent the illicit activities associated with cryptocurrency and to maintain financial stability. There was a ban that was because of the increased interest and the attraction by the investors and the other people who wanted to invest and deal with cryptocurrencies. Because of lack of regulation that were in this region, RBI resulted in banning the banks not to entertain cryptocurrency businesses in 2018. However, later earlier this year, the ban was lifted by the Supreme Court of India. It is quite clearly known that there are no official regulations and policies for cryptocurrencies in India. However, the existing AML policies for financial institutions serves as foundation, which includes FARA, Foreign Exchange Regulations Act, FAMA, which is Foreign Exchange Management Act, as well as PMLA, which is the Prevention of Money Laundering Act. FARA did not succeed, or it kind of was not successful in restricting the illicit activities, and hence it was amended in 1993 and became FAMA. Although these regulations are not directly applicable to the cryptocurrencies, but it gives a good understanding of the implications and risk involved with cryptocurrencies. And also the PMLA was eventually implemented in 2002 to ensure or to check on any money laundering activities that are taking place in this region. With the increase of the interest by the investors as well as people, cryptocurrency market is also becoming very much attractive for the fraudsters. Recently, there has been increase in the number of cases of frauds and scams taking place since beginning of this year, and hence basically the fraudsters are attracting investors by giving fake promises of assured high interest or assured high returns on this kind of industry investments. However, it is important for the crypto businesses or anyone facilitating cryptocurrency transactions to always stay compliant, as well as to have a proper compliance tools to monitor these cryptocurrency transactions. Recently, one of the largest payment banks, which is Paytm, has seen freezing one of the customers' account because of suspected of cryptocurrency trading. It seems that the market is still cautious and avoiding any direct or indirect exposure to the cryptocurrencies. However, this can be resolved by having proper investigative and cryptocurrency compliance tools. Recently, the bill was introduced to basically prevent any money laundering or to ensure articulate the risk associated with this industry, which was by the Interministerial Committee. It was drafted and it is to be presented to the Parliament. There are two broad ways to look into this bill, which is from country level measures perspective as well as from the WASP or exchange level perspective. Country level perspective is mainly applicable for the regulators, where they are required to look at what exchanges or the people who are dealing with these currencies are required to deal with them. And similarly for WASP, what it requires, for example, providing KYC checks to the onboarding as well as ongoing monitoring of the activities of their customers. Let's take a look at some of the key points, which is basically, it is important to understand not only the risk associated with these cryptocurrencies, but also the details of cryptocurrencies as covered by this bill. As this bill states that these cryptocurrencies are actually cannot be called cannot be called currencies, because the reason being they are not backed or issued by any of the central banks, neither they exist in any of the physical forms which is available to the users. However, looking at the leading economies in the region, such as Japan, Singapore, where cryptocurrencies can be seen in using in a legitimate ways for various purposes if they are monitored and regulated closely. With that, according to the bill, the activities such as mining, holding, selling, trading, and issuance of the cryptocurrencies are prohibited, although activities such as experiment research are allowed. The risk involved with this kind of currencies are not entirely different from that of traditional FIs, but at the same time, it is not also directly different or very much different from that is applicable for traditional fiat transactions, which is such as money laundering, terrorist financing, but it just requires different tools to monitor as well as investigate these kind of current transactions. With that, looking at the region, which is, I'm sorry, Japan started regulating exchanges as early as in 2017, and since then it has been observing the transactions, monitoring these transactions closely. Similarly, Singapore implemented Payment Services Act earlier this year, and as such, all the exchanges are required to be licensed under this law, Payment Services Act, and basically they are required to be licensed, and in order to do that, they are required to have a strong compliance framework in place. This is continuously gaining or helping the investors and the traders to gain interest into this industry, and at the same time, banks are looking forward to the exchanges which are eventually expected to be licensed. With that, from various verticals perspective, it is important to start looking into the regulations, and it is strongly recommended for these various verticals to start looking into the AML procedures and adhere to the AML guidelines, which although there are no officially available onto the Indian market. From West perspective, they are required to have a proper AML policies and procedures and to identify any suspicious transactions going through their exchange, and at the same time immediately report it to the FIU. From financial institutions and regulators perspective, they are required, they should have a proper transparency over the WASP or the exchanges compliance framework, And at the same time, they should have investigative tools as well as compliance tools to further investigate any flow of funds, any suspicious transactions, as well as any fraud or scams that are taking place through this industry. With that, let's take a look at some of the challenges and misconceptions that are currently floating around for this industry in the Indian region. It has been observed that there is a lack of understanding and knowledge while dealing with cryptocurrencies. And as such, many of these, and as such, one of this, the key outcome of this challenge is that there is leading to the misconception where people are thinking that this cryptocurrency is meant only for highly educated as well as extremely rich people, which is not truly the case. Because just one illicit or fraud activity can have an adverse impact on the mindset, at the same time can impact the future or the future approach towards the cryptocurrency. Just to clarify that misconception, when we gather data for the last year, which is 2019, it was found that 1.01 trillion worth of cryptocurrency transactions took place in 2019. And it was surprising to see that only 1.1% of all those transactions associated with illicit activities, which is one of the positive things, but and that's what people need to observe based on the data instead of just going by the misconceptions that are set up by few of the people who are not interested into this industry. With that, from looking from the compliance and regulations point of view, here is how Chainless's tool can help in helping various verticals in dealing safely with these cryptocurrencies. So this solution ranges from transaction monitoring, investigation of transactions, which is to identify the flow of funds, as well as to check whether there are any bad actors involved or not. These tools are very useful for VAS, which is nothing but a cryptocurrency exchange. Also for financial institutions such as banks, payment service providers, regulators, law enforcement agencies, as well as police force for finding any details about the investigations, or if there's any police case registered against of a fraud or if any scam reported by any of the users. So these tools can be really helpful in identifying the details and reaching out to the actual fraudster. With that, let me just give you an overview of how this solution looks like when you deploy any of the Chainless solution. And as from a blockchain perspective, you can see that any address, any wallet address can be seen as a string of a long string of letters as well as the numbers, which is how a blockchain, a wallet is defined on a blockchain. And from, as you see from left to right on the left side of the screen, there is a transaction happening between number of addresses to another number of addresses for the BTC, which is quite difficult to understand from a layman perspective. But when you use a Chainless tool, we can see that these addresses actually can be attributed after applying advanced algorithms, and it can be seen that the addresses on the left actually belongs to another service, which is Coinify, and Coinify has sent some amount of money to Bitstamp. So this is how easy it is to analyze the details if you have proper tools in place. With that, let me hand over to Raj for where he's going to speak about AML policies and initiatives by exchanges. Raj, over to you.
Hey, thank you, Sagar, for taking us through the slides in the presentation thus far, including the description. Before I get into AML policies and procedures, which has been allocated to me to speak about, I want to quickly touch upon the and give a little bit of detail about the Supreme Court judgment you had earlier referred to. As you had taken us through the timelines, in April 2018, the Reserve Bank of India issued a circular stating that financial institutions which are under the purview of the RBI, that is your banks and your NBFCs, would not be allowed to deal with any cryptocurrency exchanges. This is as far as India is concerned. And this circular was enforced on July 6th of 2018. Promptly, several crypto exchanges approached various high courts and the Supreme Court of India challenging this circular. The reason there were various writ petitions filed in this regard is because you can say that the crypto exchanges were fragmented in terms of legal advice received from multiple sources. However, the Supreme Court did the good job of clubbing together various petitions which have been filed at the Supreme Court level. While this was on and basic arguments were being heard, the RBI highlighted the potential of cryptocurrencies to undermine the integrity of the banking system through its role in illegal activities. Again, while this was on, it was also brought to the notice of the Honorable Supreme Court that the government is working towards drafting a bill that proposes to ban the use of cryptocurrencies in India, and also propose a jail term to violators. While this was on, the draft bill was circulated to the public by means of publication on the official government websites, but it was never introduced in the parliament. Fast forward to February of 2020, when the arguments recommenced in the Supreme Court of India. There were more than 10 grounds on which the petitioners objected to the circular, the enforcement of the circular. The Supreme Court, via its order dated March 4th, 2020, delivered by Justice Ramasubramaniam on behalf of the three-judge bench. It was a fantastic judgment which played a perfect balancing act. While on one hand, it did not agree with several contentions of the petitioner, that in terms of the several grounds raised by the petitioner, including the ground that RBI does not have the power to govern cryptocurrencies and cryptocurrency exchanges. The one single ground on which the RBI circular was set aside was the ground of proportionality. In the sense, the argument was made that the punishment meted out by the RBI to the crypto exchanges is far, far disproportionate compared to the means it was seeking to achieve. On the one hand, RBI had not banned or declared virtual currencies as illegal. In fact, as part of the arguments in the Supreme Court itself, the RBI said that it had not banned cryptocurrencies in India. So basically the Supreme Court observed that while on one hand you have not banned cryptocurrencies, you have cut the lifeline to legally valid crypto exchanges from doing their business. On that single point, the ban was set aside, and almost immediately we saw cryptocurrency exchanges being back in business. Also further, in September 2020, around a month ago, we have seen reports in the press of India that the government of India is planning to introduce a law once again, which seeks to ban cryptocurrencies usage in India. However, these press articles have only referred to sources and have not provided any specifics to the users, to the readers. Therefore, until there is clarity in this regard from the legislature, I personally feel that it is not wise to speculate in that regard at this moment. With that, I would like to move on to my slide, which pertains to the anti-money laundering policies and procedures for exchanges in India. As discussed, there is no specific law pertaining to cryptocurrencies in India, and there are no specific regulations under any law which are aimed towards cryptocurrencies and cryptocurrency exchanges as on date. That said, there is general law, there is existing general law which addresses several aspects of the business of cryptocurrency exchanges. Out of those, I'm going to restrict to the anti-money laundering related legislations and relevant regulations available in India. Before I go into the Indian regulation here, I would like to quickly mention about the Financial Action Task Force on Money Laundering, which was set up as part of the G7 Nations Summit in 1989 in Paris. The purpose of this particular setup, the FATF, was to have global standards in place with respect to anti-money laundering as well as to combat or counter terrorist financing. India became the 34th member of the FATF in 2010. And if you go back a few years, in 2002, the Prevention of Money Laundering Act was enacted in India. And subsequent to the membership to the FATF in 2010, amendments were passed to the FATF, to the Prevention of Money Laundering Act, which became codified in the year of 2012. Basically, the enactment of 2012 gave wider rights to the enforcement authorities to basically go behind anyone who's violating it. And the Prevention of Money Laundering Act applies to individuals and entities alike. Drawing power from the Prevention of Money Laundering Act, the regulators, namely RBI as well as SEBI, have come out with master directions in respect of entities that are governed by these respective regulatory bodies. The purpose of, if I can stick to the RBI master direction in this regard, The purpose of the master direction, which is basically know your customer regulations in 2016, which were updated in 2018, the purpose was to prevent banks and NBFCs, which are RBI registered entities, from being used for the purposes of money laundering. The principles addressed by these regulations, by these directions, are primarily: one, the identification of customers; two, categorization of customers based on degree of risk, which is a risk-based approach, which I will discuss later; three, client due diligence; and four, reporting of transaction of certain types to the Financial Intelligence Unit of the Government of India. Of course, it goes without saying that there will be a requirement of maintenance of records for a fixed period of time at least. Now, based on these, when I say based on these, I mean based on, okay, let me just take a step back, please. Firstly, ZEPE has in place its AML policies and procedures, which are primarily based on the FATF guidelines, which are issued from time to time to member nations. And two, we also base our AML policies and guidelines on the RBI KYC master directions, though we are not specifically bound by it. The purpose is, though, while I said that though crypto exchanges by per se are not regulated or don't need to comply with the KYC regulations of RBI, definitely the Prevention of Money Laundering Act of India applies to every crypto exchange in this country. Like I said, it applies to individuals as well as entities alike. And anybody who is in violation of the money laundering, the Prevention of Money Laundering Act under Section 3 is liable as per the penal provisions of that act. So from a customer identity point of view, before a customer is onboarded onto the ZEPE exchange, and here I speak for any good crypto exchange in the country, the first thing sought for is the identity of customer in the form of a PAN card of the customer, as well as any other government issued address proof, whether it's a state government or the central government. In addition to these, we will also require proof that the bank account being sought to be used by the customer is generally belongs to that particular customer. Once this initial step is taken care of, there's something called customer screening, whereby the name and basic details of the customer are cross-checked on third-party websites from the perspective of seeing if there are any red flags that pop up. Only after this is cleared, basic trading is allowed on exchanges in India. By the way, the customer identification and customer screening I just referred to are very, very standard to highly placed banks in India, private and public alike. So it is after this that the aspect of screening of transactions comes up. As far as the crypto exchange is concerned, there are two kinds of screenings. One pertain to fiat transactions and one pertain to crypto transactions. Both these need to be monitored effectively. As far as fiat transactions are concerned, that is Indian rupee transactions are concerned, crypto exchanges use analytics that are very typically used by several private banks in the country. And as far as crypto transactions are concerned, this is where Chainalysis comes in. The monitoring is extremely effective. I really thank the Chainalysis team for providing the service, which is the biggest need of the hour. And the purpose, basically crypto transactions are monitored from the perspective of seeing where from the perspective of the wallets of the receiving and sending parties, to see if there are aspects of blacklisted addresses or high risk exchanges or FATF gray list countries, or as Sagar was mentioning, other not so legal websites are not so legal wallets are concerned. Any of these, if it comes up in a transaction, it is immediately highlighted by Chainalysis to the compliance team at our end. And internally, we make a risk assessment based on our AML policy as to what the next steps are. So after this comes the risk-based approach or risk-based analysis, where we have concepts of enhanced due diligence, where a customer's traded volume exceeds certain thresholds. It is good to have two levels of thresholds within any organization and any crypto exchange. If the first level is breached, what you have is typically called an L2 verification, in which you seek certain further information to ascertain source of wealth, like bank transaction, like bank statements or proof or evidence of certain source of wealth. And if the second threshold is breached, that is when you will have to look at possibilities like physical verification of addresses. This is also something several crypto exchanges are following in the country. If the L2 or L3 verification, as the case may be, is commenced and the customer in question does not provide the required information or is not able to provide valid reason as to why that customer is not available at the given address, the account stands to be suspended until the customer provides satisfactory information / documents for that. In case that is not done within a specified period of time, the account is blocked. In addition to this, there is also, based on the data received from the monitoring of fiat and crypto transactions, suspicious transactions are reported regularly to the financial unit set up under the government of India. This is as far as what the Indian crypto exchanges will be good to follow from an AML perspective. Given the limited amount of time, I'm able to only summarize these points, but I'll quickly finish this aspect by referring to the fact that even as recently as the beginning of 2020, as Sagar mentioned, Singapore has come out with specific law targeting cryptocurrency exchanges and trading in cryptocurrencies. One of the aspects of this law is Singapore's anti-money laundering regulations found in something called Notice PSN02. These were published in December of 2019 by the Monetary Authority of Singapore, and they are applicable to digital payment token service providers, which are essentially crypto exchanges, which are licensed in the country. These regulations incorporate the FATF recommendations in letter and spirit as applicable to crypto exchanges. And what I've mentioned in terms of what the Indian exchanges are doing and ought to be doing pretty much mirrors what is contained in these regulations. I think that's about it from my end for now. Back to you, Sagar.
Thanks so much, Raj, for going through those details and bringing us through this development that has been taking place in Indian market. So with that, we can move to our next interesting section, which I believe most of us will be waiting for, which is the panelist discussion, and where we'll be talking about few of the questions, and I would like our esteemed panelists to answer those. So let me begin with the first question for Rahul and Shiva, which is, how should India begin to regulate cryptocurrency transactions without requiring a blanket altogether? So probably Rahul, if you would like to go ahead first.
Great. Thank you for inviting the ZEPE team. We're really excited to be here. Yeah, so if it was up to me, I would say as an entrepreneur, have a wild, wild west, but that's only one vote. The best way to probably regulate this stuff, the most logical or rational way, and even what I predict is going to happen, is what India has done in the past, which is really wait for other, let's say, countries who India both respects or works with, find out how they're regulating it and really emulate them. So the best example is, like, if you go look at the Securities and Exchange Commission in America, it was kind of created in the 1920s and 30s after the big run up in the stock market. And then the Congress decided to actually put regulations in place on how securities would be traded. And SEBI, which is India's exchange board, came out in the 90s, like almost 50, 60 years later. I don't think it's going to take 50 years after, let's say, the United States and Japan and all these other people make regulations, but I think it'll take a couple of years. So as Singapore, ZEPE is actually a company that's held in Singapore. Singapore, Japan, United States makes the regulations. I feel like India is going to look at what they're doing and fine tune what they should do within their country to make sure that there aren't any small nuances which are different for South Asia.
Great, thanks for that insight. Yeah. So Shivam, would you like to add on to that?
Yeah, surely. Thanks for this opportunity here. So like I would like to point out, like if government want to regulate this market without doing a ban or control this market, so I would suggest like government should channelize all the transaction into that could be like ultimately controlled by them, in terms of like if I talk today, So if anyone wants to buy or sell crypto, so apart from crypto exchanges which are doing KYC and AML, which are implemented KYC and AML solution, people can also buy and sell crypto peer to peer. So in that there is no KYC or AML solution is implemented, not on chain, not off chain. So that is something could be out of control of government's hand. But if government could like bring out some bring in like promote exchanges in terms of channelizing all the transaction to be happened in cryptocurrency through exchanges, so that in that manner government would have more control over who is doing the transaction, and could ask the exchanges about the people who have been trading. And because the exchanges which are operated in India have been following these KYC and AML solution as well as. So even at Biocoin, what we have did recently, we with other industry leaders, we have been working on a cryptocurrency regulation sandbox through which we are providing ways and method through which government could regulate the cryptocurrency in an easy manner. Because if I talk about the complexity involved in regulating cryptocurrencies is increasing day by day due to this increment in the advancement of in cryptocurrency, like the DeFi, which has been DeFi, decentralized finance, which has been popped up recently in 2018. So that has got a good amount of traction in the market, and the protocols which are there in the DeFi is quite complex in comparison to normal cryptocurrency. So that I believe if government work with industry players, so that would be an easy path for them as well to regulate rather than banning it.
Thanks for that answers, Shivam and Rahul. That's really good to hear from the two CEOs of the leading exchanges in India that there's a lot of work being done into the right direction. With that, let me move on to my second question, and that's for Shivam. So Shivam, should the Indian government decide to implement the ban, where do you think the market might head? Also, do you think this is a need of an hour to regulate this industry, and an advice you would like to give to both existing market participants as well as the new entrants?
Absolutely. So I guess this question contains answer from my last question itself. So I would just add on few points into this question. So basically, if government thinks and if government try to implement a like blanket ban over cryptocurrency transaction, so eventually they could stop companies like us to operate in India by doing certain measures. But ultimately, the transaction which happens peer to peer can't be stopped just by doing a blanket ban, because ultimately cryptocurrency is such a phenomena where you could store and even transact your cryptocurrency without any middleman. You could do a peer-to-peer transaction, as well as like it could raise up to a parallel economy, which is ultimately a headache, can become a headache for government itself. So that's, I don't believe, would be a great step. Moving ahead, if it's a need of an hour, that answer is yes, because like the complexity which is increasing in cryptocurrency market and the protocols which are being developed, it's ever increasing. The technology and advancement which is happening in this industry is at rapid pace, and if government don't keep up with the base layer of regulating it, it would be the government could face a hard time if they try to regulate it later point of time. So yeah.
That's good to hear. And any advice that you have in mind? I believe definitely one of that is to be compliant for anyone who's dealing with cryptocurrencies. Anything else do you like to suggest at this stage?
I guess Raj in his presentation has covered what exchanges like us are doing in the manner of complying with the laws in India. Even we don't have any liability to do so, but yeah, we as per the basic regulations in terms of anti-money laundering and all these. So we have been implementing these measures for any users who have been onboarding on our platform. So definitely, it's if anyone wants to like enter into this market, it's quite challenging for them to seek what kind of regulation applies to them. I see a lot of companies shows interest in launching their own utility token. See, it's one of the best use case of cryptocurrency. But eventually they don't have any a regulatory framework which they can use while launching it in India. Although it could be launched outside India, there are countries regulating it. So if we have this kind of framework, which I guess we are covering it through our sandbox, through which these kind of companies and entrepreneurs can get into this utility token space and other aspect of this industry. So definitely, it's something we should, as an industry, we should work together in enhancing its regulation, guiding new entrants how it's in legal manner how they can operate in this industry.
Thanks, Shivam. That's really good to hear when it's especially coming from the management of the exchange that exchanges are willing to be compliant even though there is no pressure of the regulations by the government or the regulators. With that, let me move to my third question, which is for Vikram. So Vikram, why do you think there was a sudden spike in the public sentiment towards cryptocurrency in the last 6 months? And what role might have lockdown due to COVID-19 played in this?
Thanks, Sagar. I mean, clearly the Supreme Court decision. And a lot of people, they took it as a sign that this is okay. Cryptocurrency is accepted. It is legal. I mean, if you Google Bitcoin India or crypto India, you still will get, is Bitcoin legal in India as one of the frequently asked questions. So more people are getting some clarity on that. It's a sign that if we get another level of clarity with regulatory frameworks being built, we'll just see another explosion in interest in cryptocurrency and also an explosion in innovation. Since between April 2018 and March 2020, so much happened. Another 3 times or 6 times as many people at least who will adopt it once they feel there's another layer of regulation and legal sort of blessing to it. As for trying to work using their phones and things like that, they had more time to learn. They had more time to read and watch videos and get educated. And so clearly there's a hunger out there for knowing about this technology and maybe taking part of your savings and moving it into Bitcoin and crypto. So that's only going to increase the more we move in the right direction.
Great. I think you highlighted a very, and you mentioned a very good point about taking a part of their savings, which is, that's the good thing also about the Bitcoin or the cryptocurrencies where you don't have to buy the whole number, but you can buy in like decimal places. So that's something good point you brought out. So thanks for bringing that point out. With that, let me move to my next question, which is for Rahul. Rahul, what common cryptocurrency misconceptions have you seen in India? How should we be educating the market in order to dispel any of these misunderstandings?
Sure. Probably the biggest one, and we were trying to reach out, is that a lot of people think that you have to buy one full Bitcoin, or one full Ether, and that's obviously not the case. So part of our marketing push is that you can start with 1 rupee if you want to, but you obviously it's kind of tiny. So 100 rupees is kind of our sweet point, and you can tiptoe into the space. The other aspects of, let's say, blockchain and crypto, just making it more easy and accessible. Like ZEPE, we have kind of 3 core ideas we're going after. Making Bitcoin simple and secure, right? And I think many people are kind of scared by what it is. So if we can simplify it, like email or I feel like when the first smartphone came out, people were just worried about using a smartphone. Our goal is just make it as easy as possible.
That's a very good point. So thanks for that, bringing that point. Okay, with that, let me move to my next question, which is actually for Shivam and Rahul again. So how do you see cryptocurrency evolving beyond the means of trade and investment, which is most of the people think right now? And what are the other possible ways where cryptocurrency can be put into use? So maybe let's start with Shivam first on this.
Yeah, surely. Thanks, Sagar. So I guess when in early 2017 and 2018, the major use cases were speculating on cryptocurrency, as well as few people invested in for long term. And also there were traders who've been trading, day traders as well as swing traders. But now, if I see this industry has quite evolved in terms of its use case. So there are several cryptocurrencies which are now being used in the micro payment sector, although Bitcoin is not one of them due to the transaction fees. But yeah, there are several cryptocurrency working in that sector. But eventually, the major use case I see here in India is of remittance. So a lot of businesses have been using cryptocurrency to bring in the money from outside India, as well as to send money from India using cryptocurrency. So this is one of the major use case which is started popping up in 2020.
That's great. That's good to hear. Yeah. So Rahul,
I'll make a quick comment. So the obviously the two big tokens. Bitcoin is more store value. Ether is considered really popular for smart contracts and dApps, but there's a long tail of other coins. ZEPE has about 15 tokens that are on our platform. You mentioned utility tokens. I think the biggest use case in the long run, are, let's say, non-fungible tokens, and for not to get too technical, those would be like, let's say, digital art, right? Or unique pieces of, let's say, some sort of digital token. And then the other aspect of it is, my favorite use case, is healthcare. But outside of that, because I've been a healthcare entrepreneur for a while, is the Brave browser, which has a great token called the Basic Attention Token. BAT is basically a way to get paid when you surf the web, right? It's almost like airline miles for when you use the internet. And I believe more and more use cases will be like that in India. People will start using tokens within various apps.
Absolutely. That's really a good point brought by two our panelists, which is the remittance and one is for the healthcare, which I am definitely sure, like, giving the number of the transactions or the remittances coming into India will be definitely helpful if this can be eventually used as one of the means of remittances. Great. With that, let me move to my next question, which is for Vikram and Rahul. So recently, the Indian government has started to move towards digitization and a cashless economy. How might this initiative be helpful for growing cryptocurrency businesses, which is, I'm personally very curious to hear. So let's start with Vikram with this.
So sorry about that. With digitization and the cashless move towards cashlessness, or at least even the idea of it, the ground is already prepared for people to explore technologies that are digital, people to explore technologies that are secured in a different way than simply placing trust in a bank. Banks should continue to be trustworthy, and banks will continue to adapt. But blockchain technology is already something that anybody who is involved or interested in this area is aware of. They may not know the details of what exactly blockchain can do, but everybody is kind of waiting for, it's almost as though we're horses on the starting line, ready to move ahead as soon as somebody just kind of opens up the gates and gives permission. So, and once you do, you'll see a new set of innovations. The same way that, digitalization of money was an innovation. Now we have the chance to digitize other things, but do them not just for the sake of being electronic or being digital or being virtual, but because it's clearly better, more secure for people, and lower cost and accessible for everybody. The great promise of this technology is democratization. The great promise is that it's not going to create one more have and have not divide. Just as Bitcoin is for everybody, blockchain technology is for everybody. And so this could make a difference for not just a few million people, but billions of people. Rahul, do you have some stuff to add?
So a couple comments there is, we're in this post-COVID world. It's interesting to me how, cash, which is great, growing up, but like, the risk of getting viruses when you touch things, right? And so digital money has so much better stuff. Yeah, there's weaknesses in digital money and there's weaknesses in physical money, but like what's happening now is this virus has really caused a disruption. It's almost like an epoch where, like, something's like a big asteroid hit is shaking things up, and then we're now talking on a virtual conference, right? Like, how many virtual conferences did all of us attend 2 years ago? Very rarely, right? We have 100 people here now, and just like that, like, Zoom went from being kind of something used every once in a while to something that people use almost every day. And people kind of forget that, they expect things to happen like this. It can happen like this, and then it can go like that, and then it can go like this. It goes through rapid up cycles and plateaus and up cycles. And so what will end up happening is, the government can push stuff, but oftentimes the environment will nudge it even faster. And so, after demonetization, obviously, there's change in habits, but now what's happening is, with everyone working from home, this really move towards, let's say working remotely. I feel like electronic money has a much greater, path forward.
It really, we have new needs, right? We have needs that we didn't have before that need to be filled. There are gaps where entrepreneurs and innovators can come in and identify these needs and help people to fulfill them. I mean, Zoom did this, and blockchain is certainly already doing it, but it's just the beginning. Yeah, we need, it's one of those changes where it's not just increments, like Rahul said. It's life has changed, and there are needs that are waiting to be fulfilled, and this technology can fulfill them.
Absolutely. And I think the amount of digitization that has happened in like last 1 year, or especially when the Corona period came in, has not seen in like last 5 years. So that is something really has changed the world, in especially countries like India, where a lot of transactions used to take place over the cash. So Vikram, as you brought a very crucial and important topic about the bank's involvement in financial system, do you think this, just if you feel like answering, if not, you can we can move on to next one. But do you feel like the banks have crucial role in terms of when it comes for crypto adoption for the country or for the economy?
I think yes, inevitably. I mean, banks at their best have been one of the trusted institutions in human society for hundreds of years, thousands of years even. So, and that's why ZEPE is so pro-regulation. We want harmony with the existing system. We're not these sort of smash the existing system anarchists. And that reputation that crypto people gave to certain crypto, parts of the crypto world, that really doesn't reflect most of us. We want to have a successful integration into the financial system and be one more asset class, one more set of technologies, one more way of bringing financial inclusion to millions of people who don't have it right now, which is a goal that the government of India has been talking about very proactively for some time. And, if we can be part of that, that would be wonderful. Yeah.
Absolutely. Thanks for that very
Sagar,
helpful answer.
Sagar, if I may add to what Vikram said.
Sure.
Yeah. So banks, I believe, have an equally important role to play, as do technocrats, to ensure adoption of cryptocurrencies on a larger scale. One, while banks are, if you look at the situation today, crypto exchanges are at a level, they are centralized in the sense the platform, the crypto exchange is a platform that brings buyers and sellers of cryptocurrencies together in the simplest form we know it. For that to work successfully and adoption to be increased, one, it should be made very, very clear to the general public that the banks are providing the required lifeline to support the transition of fiat, that is rupees, from an individual's bank account to the crypto exchange for the purpose of purchase of crypto. Likewise, the technocrats' role comes in the sense it is completely on the technocrat to ensure that crypto transactions are simple, they are secure, they are easy to understand, and they're clear. So only when both banks and the technocrats move in the same direction, the possibility of adoption by the masses of cryptocurrency increases. That's all. Thanks.
Absolutely, and it
Here,
makes
here.
perfect sense.
That's our lawyer.
Yeah, I love it. Hey,
Absolutely.
sorry, I'll make a quick comment just because I have to attend a board meeting in about 5 minutes. If I see a lot of questions in the thing, if anybody wants to ever email me, you can email me at ceo@zepay.com. And I see there's a lot of questions from the panel, and I'll have someone from our team get back to you, at least from Zepay's perspective on this stuff. But I'll have to hop off in a few minutes. But I just want to say thanks, Chainalysis, for this is a phenomenal conference.
Thanks, Rahul, for your time as well. So let me quickly proceed to our next question, which we already have for our panelists, which is for Shivam. Given there is a still little regulatory clarity, how should cryptocurrency businesses go about implementing compliance solution and creating a compliance framework?
I guess if I have already answered this question, but that's a rephrased manner, but surely I would love to be more descriptive this time. So like as I mentioned earlier, so in terms of all the compliance as we have in like FATF, as Raj mentioned, which we all exchanges in India use in our system. So we basically, whenever we onboard any of our users, it can be any exchange or it can be any crypto related business. So I'm not just specific talking about crypto exchange, but even if you are having any other kind of business related to crypto, you could follow basically know your customer compliance. So you should know whom you are dealing with, taking their relevant documents like PAN card and like national ID or any other address proof. Other than that, if and in terms of if you are dealing with banks, you should be verifying their bank accounts. But also if you are more into the on-chain side of the cryptocurrency business, you could use tools like Chainalysis for getting into the right side of the regulation. So I guess if you just adopt these basic measures, you could jump into this industry, and this industry provides a lot of opportunities in terms of new business model, which could be like adopted by the new age entrepreneurs, and they could experiment in this industry. So this industry is open for experimentation. But yeah, definitely we need to be at the right side of the regulation.
Absolutely. And I think this is something, compliance is not something new for all the financial institutions. It's just that it requires proper tools and ideas to get this implemented.
Yeah,
Right.
we should be just having a basic basic regulation in place, because whom we are dealing with, we should know. Because tomorrow, if some fraud or any criminal transaction happened, you should have a full information whom you were dealing with. So you would be protected.
Great. We have almost like 1 minute left. So I have my last question, which is for Vikram. So Vikram, if you would quickly answer this last question for today's session, which is what can the cryptocurrency ecosystem in India learn from traditional FIs in terms of combating financial crime and growing their businesses?
Well, I think we can learn from what they're doing well. We can also learn from the challenges that they've gone through. The important thing is that cryptocurrency exchanges have been and should conduct themselves like they are already part of the financial industry, not like outsiders. We are. And so that's why, self-regulation has been a key part of ZEPE's strategy for years now. We are basically regulating ourselves with a view towards what the world will be like once the government is able to put together a regulatory framework. That's why we adhere to KYC and AML standards that will be the kind of KYC and AML standards the world will need and India will need for the next, decades. So really, we should conduct ourselves as though we are right there alongside banks, hedge funds, and other major financial players. And then we'll be treated, I think, as though we are. So, yeah, that's my answer.
Absolutely. Thanks so much, Vikram. And with that, we have almost touched the 1 hour which we had actually allocated for our today's event. So with that, unfortunately, we won't be able to take the questions which has came in from the audiences or our listeners today. But what I would suggest is that feel free to get in touch with us after the event, which is either you can reach out to us in at Chainalysis. For example, my email ID is there. There is a ZEPE contact as well as Bayou contact, or you can also write into us and then we can direct to the respective person, whichever way. If we can, we really don't have much time to take your questions today. But again, thank you everyone. First of all, thanks to all the panelists for your time today and joining us. And we look forward to getting in touch with you again. And thanks to all the listeners for dialing in. Thank you and have a nice day ahead.
Thank you, Saga, for having us over.
Thank you.
It has been a fantastic one.
Thanks, everyone.
Thank you.
It was nice.
Thank you.